So here we are at the O2, everyone. Yay! There's more people than that, honestly. It's a momentous event at the O2, and I'm chatting right here with Mark, CEO of Challenger Acquisitions. Mark, thanks for coming along.
Great to be here, sir.
Now we're doing something, a bit of an experiment, something a bit different. So we've got some guys here. Out in the audience, we have your loyal fans, your shareholders. Right here, I've got three guys who don't follow you on Vox Markets app. They are not shareholders. What's your names, guys? Can we have a pan of the guys here? Steve. Chris. See, real names, no messing around. Steve, Chris, Matt. Yeah? Now, what we're going to do, Mark, is chat to you about the company, and hopefully you are so convincing about your business, these guys will follow you on their app. So am I true, guys, in saying you guys don't follow Challenger Acquisitions on the app? Okay. CHAL is the ticker, all right? So first and foremost, Mark, let's have, say, a 1 minute pitch to the guys there, but obviously facing the camera, about Challenger Acquisitions. What are you all about?
No pressure at all.
No pressure at all. You're three guys you have to convince.
Go?
Go for it.
Challenger Acquisitions. We're a publicly listed company trading on the main board. If you think of the London Eye, that's what we do. We bought an engineering company in the Netherlands called Starneth. The CEO of that was the project manager for the London Eye. So we've got the guy that designed the wheel and the drive and control system for the London Eye. We've got all that technical expertise in our company, and what we want to do is help other developers build other London Eyes throughout the world. So that's the main part of our business. The second part of our business is we own equity. We'd like to own equity stakes in multiple giant observation wheels in the world. Currently today we only own one stake, and that's in the New York wheel. We have a $3 million US investment in the New York wheel, which we think is going to pay dividends over the long term. That's Challenger Acquisitions.
Yeah, good pitch, everyone, yeah? Yes. Be more enthusiastic if you want, it's up to you. Now, I like it. I like the business, Mark, you know, because I say, when the London Eye came along, apparently when it came along, it was temporary, but people loved it so much, queues around the block, non-stop. They said, this is going to be in fact, the O2 apparently was going to be temporary when it first was built. But it was so popular, people said, let's make it a permanent fixture. And now they're copying London all around the world. And New York, typical Americans, you're not American, are you?
No,
Canadian. They're making it bigger and better, aren't they? But you're involved with that. And so you are basically the guys, the go-to guys in what's called the giant observation wheels, aren't you?
That's correct. There's only 4 of them operating in the world, and 2 of them are under construction, so 6 in total. Our Starneth team, they've been actively involved with 4 of the 6 in the world. So they're the go-to guys for giant observation wheels in the world. And
I assume most of you guys have been and stood next to the London Eye. There's always a queue there, isn't it? Yes. Now, you imagine owning a business like that. There's always a queue, you know? That's a good business. And it's, like I said, it's so popular, they are copying this model around the world. These are the go-to guys who can do that for you, all right? So, let's have some questions. Let's go to the audience if we can. Are there any questions out there in the audience there we can get from Mark here of Challenger Acquisitions? Anyone? Put your hand up. Zach at the back. Zach was looking at his phone then. Pay attention, Zach.
I'm too mean to go on the wheel. Is the price going to go down?
You can't judge that. I don't know if you heard that. Zach said he's too mean to go on the wheel. Or the price is going to go down. No, but hang on. You are an anomaly. You know, there are lots of people queuing up there who will pay the money. You know, so. Yeah, an anomaly. So listen, you can't say, can you have a discounted rate for the Zacks of the world? You know, you can't have a badge or ticket to get on free.
No, but you've got great pricing power, that's what I was trying to say.
Yeah. So is it a change in pricing plan? I mean, you're not involved with the pricing aspect, are you, of New York? Do we know the figures? For example, we can see the queues. Do we know the amount of people that go on these wheels or the proposed revenue? And in fact, a good question I had from upstairs was, where will you be, hopefully, in 5 years' time?
Yeah, so onto your pricing question. Right today, it's £23 to go on the London Eye, and the New York wheel will be in the low $30 range, US. So given the exchange rates, it's about the same. So that's, it's about equivalent to that. But it's really, it's competitive with the other attractions in the area. So, the London Eye is priced based on packaging that they do, and the New York wheel and other giant observation wheels, they'll all be priced relative to other attractions in that city. So it's approximately the same, but again, it just has to be competitive with the other attractions.
For senior citizens discount.
do you mean wait, Zach? You're there already. And so fly to New York, cost you 500 quid, and get a cheaper fare on the New York wheel. So cool. Any other questions at all?
Yeah, Jakarta, you've got a wheel that you're looking at in Jakarta in Indonesia. What's happening with that? Because I understand we're waiting for funding or something.
Yeah, that's correct. We've signed a contract. The developer secured the land. He's got his funding organized. He's getting his banking arrangements set up so that ultimately we can draw down and start that project. It's taking him longer than we would like. We'd like to get that project up off the ground. The sooner that can happen, the better. Because I think as soon as we do one project and start one project, that shows the revenue model with StarNet, what they're doing in terms of design, engineering, project management. That'll transform the company and drive revenues and cash flow into the public company. So we can't wait. That can't happen soon enough for us. Our shareholders have been patient, and the sooner that happens, the better. In the meantime, what we're doing is we're just trying to work on other projects in the pipeline. So we've got a pipeline of about 25 different projects, and Jakarta is the first one we believe that'll come out.
Do you know what? I just think it's very interesting. It's one of those things that you see, and it's almost like it's a no-brainer. When you see that on the London skyline, you can imagine every other mayor or tourist industry in every other city thinking, "What the heck is that? We want one of those," And I just think it's going to get done. But like you said, it takes a long time to get going. But genuinely, are you one of the only guys in this kind of space? Because you are sort of pioneers. But is there competition from anywhere else a lot?
No, it's very unique. I mean, because our guys they've been involved with 4 of the 6, there currently is no competition, but it's a very niche market. These projects are complex, time-consuming. You have to get all the political elements lined up, the funding, the environmental issues. You've got to secure the right site. All these factors have to come into play. That's typically a 2 to 5 year process. And then once those are in play, you have to have the funding available. Then it's a 2 to 3 year build. And then you get a fantastic project like the London Eye. We believe the New York Wheel will be very similar in terms of returns to the London Eye, but it does take a long time to get them started. It is a long construction period, but then these wheels are being designed to last 40, 50, 60 years. So that's part of the reason why we want to have at least a strategic small equity stake in some, if not most, of these wheels. Then we've got that nice annuity, for decades to come. So that's a major reason why we're looking at these wheels.
Yeah, that's what Warren Buffett would call a moat. It's like a barrier to entry for most people trying to challenge you. You have to have that niche that most people, and it's a long time to get it going. So that's quite good. Okay, Mark, listen, we're going to have. I haven't told you about this, but I want you've done it on the podcast. 3 reasons why these guys should put you on the Vox Markets watch list. So go for it.
Again, no pressure. It's a good thing we practice this. 3 reasons. Number 1, we've got the technical team in StarNet. They're the go-to guys in the world. We believe they're the only ones in the world that can do this currently. So we've got the guys, the Dutch engineering team, to do this. Number 2, we've got a pipeline of 25 prospective projects. They're all at different stages in this. Jakarta, we believe, will be the first one that comes out. We are working on more of them, but there is a nice pipeline of 25 of those projects. They're all 100 million plus type projects that ultimately will flow through the public company. The third reason is longer term, we want that portfolio of equity stakes. So we already have one in the New York Wheel. We think that's going to be worth a lot of money to us, and we'd like to get more of those. So again, longer term, we'd like to get those equity stakes bundled in and generate a long-term return for our shareholders. Those are the 3 main reasons.
Cool. So we got a pipeline of jobs there. Hopefully, you are in a very niche field. You yourself as well as a stakeholder in the company. You've taken quite a bit of equity, and like I said, it's a business there we can see working around the world. And if you're involved in every one of these, it's going to be a good business. So let's go to the guys over here. I don't know if we get a shot at these guys again. So Steve, Chris, Matt. Steve, Chris, Matt. You weren't following Challenger acquisitions on Vox Markets app. Steve, what do you think?
Give it a go.
Is that a follow?
I'd have a few more questions to ask.
Go on, ask a question. Off the
top of my head, I can't think of any.
Right, well, just hit follow, yeah? So, Nick.
Yeah, I'd like to look at the financing and the income streams, potential income streams, which must be massive. What's the investment for each project? If you look at 25 projects, what capital investment do you need for each one?
But that's why you learn by putting them on the watch list.
Exactly.
you will get that information. I mean, just hit follow, you'll get financial results. So is it a follow, yes or no?
Definitely.
Yeah, cool. So 2 out of 3 is not bad. We've got the majority there. Matt.
What cash position have you got currently?
I always go to the cash position.
I'm sorry, and also what news flow in the next few months might we expect?
The news flow, obviously,
Well, to cut
25 projects is
Potentially.
massive.
And
In the next 6 months.
we're committing to one project each year. These are major projects. So we're saying we'll pull one major project out of that pipeline of 25 each year.
This is
And
my...
we-
No, exactly. This is my take on it. Okay, this is my take on it. It's a unique business, right, in a very niche field. Now that in itself is an opportunity. You know, financially you don't know. Business is risky by nature. Business is risky. But if these guys pull this off, you know, and they are the guys who do it, it could be huge. You know, and I'm thinking, you know, it's going to be worth a follow.
Sure.
And it is a long-term play. I mean, I've bought a lot of stock in the last few months. It's a long-term play. It'll be a growth story for the first 4 or 5 years. Then after that, once the returns come from the equity stakes, then it becomes more of a dividend type play. So longer term, I want to have dividends for my family.
How much do you hold?
I own 1 million shares today of the 16 million outstanding. And
Cool.
I've got permission from my boss at home to load up a bit more. So.
Mark, you do not have to sell them anymore. They got 3 followers right there. Ladies and gentlemen, Mark, CEO of Challenger Acquisitions. Big round of applause, please. And the guys here. Here we are. Here we are at the O2 for the Momentous Events 2016. I'm joined by CEO of Barclay in IKEA, because of course it's based in Spain. Ticket code BKY. Paul, thanks for joining me.
My pleasure, Justin. Good to see you again.
Now, we've spoken to each other a lot in the podcast. I have to say, for the interest of transparency, guys, that I do hold some stock in the company. Now, we're doing a little experiment. We've got 3 guys here who do not follow you on Vox Markets, on their app, all right? Your job is to do a convincing job, enough job to get them to follow you on the app, all right? And now I think you will, because I've been convinced. And so here we go. What's your name, guys? Matt. Dan.
Anthony.
Matt, Dan, Anthony. Cool. All right, lads. So you're not invested in Barclay here. You do not follow it. Do you know anything about the company at all?
A little bit.
A little bit? Nothing at all. That's good. All right, Paul. Well, let's start off for the guys here, giving us a 1-minute summary as to what the company is about.
We're developing a uranium mine in Spain. And you say, why would you want to develop a uranium mine in Spain right now? Because this year the uranium price has tanked, fallen 20%. And this has put the uranium price to be the lowest uranium price for a decade. In fact, it's so bad that Cameco, the industry giant, is actually closing mines and laying off 500 people. So you say, why are we developing a uranium mine when clearly the industry leader can't make money? And there's one really good reason for it, is because our asset can produce uranium at incredibly low capital cost and way below the current spot price. And the way you think about it is, you hear about these companies talk about this thing called tier 1 asset. What a tier 1 asset is one that can produce in this case uranium, or it could be an iron ore, it could be copper, it could be gold, what's called through the cycle. We all know that commodity prices are in a cycle. We never know how low it can go or how long. What a tier 1 asset does is produces strong cash flow through the bottom of the cycle, and so it's in production when you come out the other side. And what's exciting for us is we've just literally made an announcement on a feasibility study today, and the numbers are really good. We can produce uranium at half the current spot price. This is the decade low spot price. So clearly we're in that space. So you might say, that's fine, Paul, it could sit there at the bottom for 10 years. And I'd say, fine, it'll make some very good return. It'll generate some good cash flow. But the excitement is the uranium prices come down, but the industry knows that in a few years' time, we've got 2 things happening. One is they've got this amazing new Chinese reactor demand. China's building 23 reactors at any point in time. It's commissioning 8 per year, not like Hinkley Point. They're building 8 Hinkley Points every year. They're going to come into the market. And then the American utilities, they're all fully contracted, but their contracts run off from 2018 onwards. So we know those 2 people are going to come into the market. It depends which analyst you talk to, but that's when there's a deficit, and that's when sometime out there, the uranium price will react. So what we're saying is, we're building the mine now. We've literally got bulldozers arriving on site on Monday. We will be producing, hopefully, somewhere about the time when the new demand kicks in. So the way I think about it as an investment, it's asymmetric. That is, the downside is limited. We're going to build it. The uranium price will go a little bit lower, squeeze our margins a little bit, but the upside is explosive. And in fact, Dave Talbot from Dundee in Canada says the uranium price is going to have the biggest deficit it's ever seen, and the uranium price reaction could be like it was in 2005, violent, fast, explosive, multiple times. So I'm suggesting to you is we're a bit of a banker at the moment, boring cash flow generator at the moment. Sit there, put it away, and then sometime you're sitting there leveraged to this explosive or violent reaction to the uranium price. So Matt, will you join me? I bought stock. I'm saying, Matt, you must be convinced of that. I can see you are nodding.
I'm intrigued. I've been intrigued for a few weeks now.
Very good.
Looking at UK, I'm really intrigued.
But I'm very happy to answer any question. The principle of it is, it's very, very simple. You guys all like cash flow. That's what we all understand. And an asset that can produce cash flow at the bottom of a cycle is one where smart money gets made. Anybody can chase the gold stocks. All the gold stocks today are trading at 1.5 times NPV. You know, discount the cash flows back, look at a gold stock now, they're all being chased up. So they've run. So where's the next commodity you can go into that can run? It's going to be one that's sitting there at the bottom like gold was a year ago. So the one you want to be in is the one that can survive at that time.
Do you know, I'll say why I bought the stock, right? And it's interesting. I bought Royal Dutch Shell recently because the oil price went down, and the old saying is, you know, the cure for low oil prices is low oil prices, because people stop, you know, there's big companies start shutting down, you know, expensive investments, and a couple of years down the line, with the oil sort of supply demand slowly growing, you know, you'll have, you know, a lack of oil. But the trouble is, you've got like China and India here building a lot of these, you know, plants, nuclear plants. So the uranium sort of usage is going up quite a lot. It's not like it's sneaking up like oil, a tiny little 1%, 2% a year. We've got a huge ramp up here, you know, happening when uranium sort of producers are going down. So this dynamic is very interesting. You being one of the lowest cost producers around will see the benefit of that, you know, and so that's why I find it interesting.
We do, but we all know cycles can take longer.
Yeah.
You know, you can sit there with low prices going for a long period of time. There's another thing, the reason why the UK generalist funds are buying us at the moment, we've got BlackRock, Fidelity, Majedi, River and Mercantile, they're all buying the stock on market. The stock's gone up 3 or 4 times this year. It's because there's one exposure that we've got they really like. We've got a US dollar revenue stream, that's the uranium price, but we're based in Europe with pure euro costs. So their view is, even if the uranium price stays flat, our effective costs will fall because they see the euro devaluing long term against the US dollar. And they like that exposure. So the fact that we've got a margin now that they think will get bigger, and then it's leveraged to whatever the uranium price is going forward. So just that simple, it's like the Yellen tightening, the Draghi easing spread, they like to buy into that.
Cool. Right, any questions out there? Anyone got any questions? No? I've written a blog on this, by the way, and it's about 5...
Can I just ask you a question?
Yes, Medad.
Paul, obviously we've seen your impressive DFS today, and well done, and thank you to the whole team. Given the parameters in the full report, do you believe there's going to be a cost overrun greater than 10% in the probabilities that you've set out in the report?
Well, let's first of all go through the key figures if you can. That's a very complex question I don't even understand. But so let's go through some of the.
Obviously, Justin's illiterate, but there you go.
Well, can I just say I fully understand the question. The question really is, I'm saying to you all that to put this asset into production, it's going to cost $100 million. The question from Edit is, will we cost overrun, and what are we anticipating? And I agree, it's about 10%. But we're in a deflationary environment. And in the deflationary environment, particularly in Europe, costs are coming in very competitively and often lower. There's a lot of competition for work. So yes, 10% is the outer, but we're hoping to deliver within that. So if I say to you $100 million, 110 is the upper limit. It's not like it was during the boom with iron ore, where an iron ore mine would come on, people say it's going to cost 100 million, and it ended up costing 200 million. It's more like 10% or less.
In that case, it was a very good question.
It was a good question.
Okay, follow up with, what is your level of confidence of the actual people who do the work to get into production? Do they have the capability and also the actual ethic to get there on time or thereabouts within 2 or 3 months today?
The management team I have on site is, they've built 3 major mines in Spain before. They've probably got the best track record, or one of the best track records in Spain. They're Spanish, they're really, really good. But yes, the other risk you're highlighting, will there be delays? Yes, there almost certainly will be delays. But what we're doing with everything we're doing is being upfront about it and saying we're doing everything we can to minimize those delays. And I think Justin will appreciate, will recognize, I think we've just about hit every milestone this year we've talked about. We actually said we'd start construction the middle of this year. Well, okay, we're 2 or 3 weeks late. We're starting Monday morning, whereas we should have started in June. So, and that's after 10 years. Our 10-year anniversary was June this year. We've missed by a couple of weeks. So we're still tight on the schedule, but yes, delays are the things we have to live with, and we're battling it all the way through.
Can I say, I mean, when I read about Buckley and here, the only problem I had was getting into the stock. If you look at the chart, a very strong trend, and there was no pullbacks at all. In fact, today, I think one of the biggest pullbacks we've had. But literally, you will not see a pullback in the stock. Momentum is phenomenal. So that's one of the biggest problems. If you do some research on it, it's a good deal. I'm not saying buy, I'm saying maybe put it in the watch list. But Paul, 3 reasons, please, convince the guys here why they should add it to the Vox Markets watch list.
Well, number one is the stock's fundamentally undervalued. We're sitting there with 40 pence. You're going to see some broker reports coming out now where we're valued anywhere between £1.20 and £2. So there's a valuation issue there. 2 is we've got fantastic momentum. The people who are buying the stock are not other retail investors or other high net worth investors. They're the biggest institutions in town. Every name, Fidelity. In fact, some of the names coming into the stock right now are the top end of town. And they're not buying through a placement. They are buying on market. So you're in very, very, very good company. And thirdly is, as Justin knows, we've got very, very good news flow. And I think everybody understands if there's news flow, there's action that people go through. So I would recommend to you, buy the stock, sign up for our newsletter, feel engaged, give me a call, enjoy the experience.
Yeah, and do you know what? I saw someone on Twitter saying they sold recently. I thought, are you insane? I mean, in your report recently, 116 million net profit over the life of the mine. You know, so 11 million a year.
No, it's 116 per year.
Per year?
Per year.
Net profit per year?
After tax.
You better believe it, Justin.
Right, guys, are you following the stock, yes or no?
I have a question.
Go on.
What percent is held by the institutions, and what percent of the board own?
The management owns about 10%, and the institutions own about 45%.
Okay.
So it's being bought by the biggest institutions in London on market. I cannot stress that more.
Yeah.
No, I'm very interested.
There's certain flags that get flagged up, and you realise when you go through them, and you think, wow, that's good, this is good. So it's a lot of things. In fact, give me email addresses, I'll send you my blog, and you can read through it. And I try and make it as simple to read as possible, because I'm pretty simple, so I have to understand it myself. So what are you saying? Are you following?
Yeah, definitely.
Are you following Buckley and here?
Yeah, I'm in.
3 followers, Paul. Give Paul a round of applause, please, ladies and gentlemen. All right.
Welcome on board.
Here we are at the O2 at Momentous Events 2016. I'm joined by Anthony here, who's CEO of EVRH. Now, Anthony, I've got to admit, I know nothing about the company whatsoever, which is that's a good thing, though.
It's a good thing. Tell you more.
I've also got 3 guys on the couch here. So we've got, is it Chris, James, Alan? You don't hold stock in the company. You do not follow this company on Vox Markets app. Right, Anthony's job is to convince you to follow them on the app, okay? So we're going to go through the company. First and foremost, Anthony's going to give a 1-minute sort of roundup as to what the company is about.
Sure.
So Anthony, to the camera, but for the benefit of these guys, what is EVRH about? I can see we've got this here, but a kit. What's it
I
about?
guess the first primary question is, do you know anything about virtual reality? No. Okay, so...
Do you know anything about reality?
It's the next step in gaming, I would assume.
Completely.
So, yes.
Virtual reality is not a new concept. It's been around since the 80s. In the 80s, it wasn't very good. We now have companies like Facebook, HTC, Sony, and Google developing, and Samsung developing their own VR headsets. So, as part of that, EVRH exists to capitalize on entertainment within virtual reality, to create content and to create delivery platforms. So our first delivery platform is Melody VR, which is a music platform. So if you can't be at a show here at the O2, for example, and you want to see a band, you want to see a singer, through our app, which will be across all of the platforms, you can tune into an event, you can watch an event that's already happened, but instead of just watching it on your laptop, you can see it as if you're there. You can be on stage with the band, you can be backstage in the dressing room, and then you can move throughout that event as it happens in real time.
Marvellous. So, Anthony, I have a question right off the cuff. Now,
Yeah.
listen, the people at home watching on the camera are at a disadvantage, but give this to one of the guys, because I've tried this, and it is phenomenal. I do like it a lot. It really works. Give it to Alan and James and Chris. Yeah,
You've
James has tried
tried
it.
Have you?
So while they're looking at this, is it on?
It is on.
So you hit the side there, you look around, and it's like you have a 360-degree view.
So-
It's hard to explain because it's virtual reality.
As if you are there. So if you put this to your eyes and just tap that dot, you will be on stage with James Bay.
And you will look around, there'll be people live looking at you. I don't know if you can get tap the bit on the side.
And so now
Look up,
you can
look up, Alan.
down,
Look
left,
up,
right.
look down. Look up, Alan. Look around. See, it's so why Alan's doing that, Anthony?
Yes.
Explain where the revenue comes from.
So the revenue comes from our app, as I mentioned. It's a free of charge app across all of the devices. But within that app, there's a certain amount of free content, but also there's premium content. So if you have an artist, someone like The Who, for example, and you want to see their show, well, you may be able to see a small amount for free. But if you want to see the whole thing, you can purchase that as an in-app purchase, similar to the way you have an in-app purchase on your iPhone. So you tap and you pay your money, and then you can experience that show for as long as you have that device, so over and over again. So you can be there on the stage, you can be there in the crowd, and you can move around throughout that experience. And so the revenue is generated by the sale of content, the VR on demand.
So for example, let's say I want to watch the Rolling Stones.
Yeah.
I can't be bothered to go there.
Yeah.
They did a recent concert.
Or it's sold out, you're not old enough, you're on the other side of the world.
How do you get that content then? How does that work?
So we work with many artists. We've worked with just under 400 artists now to create VR content at their shows, in their recording studios, at their small capacity events.
Yeah.
So we have great relationships with them. We know their management very well. We know their record labels very well, their publishers, all of the rights holders, which makes this a very difficult market to enter. But if you have those relationships, you can make a call to James Bay and say, hey, you're playing Festival Number 6, you're playing in Hammersmith Apollo. Would you like us to capture this in VR and make this available to the world and to your fans via VR and via our app?
Yeah.
And that's how we create the content. And as part of that, we custom developed our own video cameras. We built our own technology for production, post-production, delivery. So our pipeline is completely end-to-end and in-house, but it's a set of technology that isn't available to other businesses or the general public.
Do you know what? This is ideal for me. I like watching concerts on telly.
Yeah.
But it's like people say you miss out on the atmosphere. And listen, I didn't want to push my way through 600 people to go to the toilet,
Yes.
When I can watch that, and I think this would add to my experience,
Completely. And
So first and foremost, how much does it cost to get this content from the artist, or is it a revenue share? How does that work?
Yeah, so there's a revenue share to all of the rights holders. So that's the artists, their record label, the publishing and the songwriting, and certainly in certain circumstances, it's also the promoter of that event. So we hold 40 exclusive partnerships with festival promoters, and where we capture content at one of their festivals, so for example, something like Festival Number 6, then we'll capture all of that content and then make that available to the fans, and through that they'll also get a revenue share from the content.
Okay, so guys, do you, Chris, James, Alan, do you have any questions at all? Alan?
I mean, virtual reality has been around for a while.
Yes.
It's been discussed a lot, broadcast a lot, but clearly this is a great move forward. And I'm with Justin on I like to watch music on TV as well. For instance, Led Zeppelin played a gig here a few years back. If I could have seen that on virtual reality, it would have been a dream come true. I'm just interested, what's the mind by making this?
So this
for you?
So Alan's asking what's the market potential if he's off mic. What's the market potential here? Because he likes the idea, but like I said, you know, do they have to buy that bit of kit? I assume. How much does the kit cost?
So at the moment, if you buy a new Samsung phone, you get this for free. But it ranges anywhere from £10 for a Google Cardboard up to £600 for a very high-end HTC headset. So it's accessible depending on how much money you want to spend. Yeah, if you pre-order an S7, you get one. You've got one. If you also buy an S7 now, every other month you get one for free. So you can always backdate and get one through the post. So it really just runs off your smartphone. So you either have one already and you pay your £80 for the headset, or you get one for free with a new phone. But the point here is that this is, aside from the 80s, it's very early days of technology. So sooner rather than later, we're going to see these being realistically given away by a lot of phone manufacturers, and they'll be in every box. And at that point, the interesting thing here with the industry is that billions of dollars have been spent in the hardware. No one's really creating a vast amount of content. From our point of view, you know, our content library is certainly the biggest VR content library for music, and if not the biggest VR content library in existence. So lots of money's been spent on hardware, no money's been spent on content. So we aim to fill that gap.
Yeah, do you know, it's one of those things that we know is coming,
Yes.
you know, and it's like, who grabs that? And, you know, who delivers it in the best way, the most, you know, affordable way? The guy who's going to be, you know, it's like going to be one of these new Facebooks probably, or, you know, but it's like I said, it's will it happen? But we know it's coming, you know.
It's coming.
Okay, listen, let's round up. For the guys here, 3 points. Why should they add you, EVRH, to their Vox Markets watch list?
As far as we know, we're the world's first pure play virtual reality stock. Secondly, as I mentioned a second ago, we hold the world's largest library of virtual reality content. Certainly music content, probably virtual reality content as a whole. And on top of that, we hold exclusivity partnerships for a minimum of 5 years, up to 25 years with music festival promoters, which means that throughout the lifespan of the technology, and it is early days right now, we're going to have a consistent stream of new content, which will be able to be monetized via our app.
Do you know what? I mean, I don't follow you on Vox Markets, but I am going to follow you.
Great.
Because it's one of the things, even if I'm not at the moment going to invest, I'm going to follow the story.
Please.
And see what happens. And
Exactly.
I think, you know, because it's one of the things that could blossom and become huge. And it's almost like, I don't want to miss the train here, you know?
Completely. And as you know, we're pre-product launch for Melody.
Yeah.
Later this year, we'll be launching that product, and people will be able to consume it as consumers, get it on their devices, get it on their smartphones, have a look at it. And
it's almost,
that's going to be exciting.
Yeah, and it's almost by following you and reading your RNSs, you're following that industry, the virtual reality industry, to see how it's developing. And I'm very interested in that because I think it will be massive, you know.
I agree.
And you know, Mark Zuckerberg believes it will be, and he's a guy who knows his stuff a little bit. So okay, let's go for the guys here. Alan, would you follow EVRH on the Vox Markets?
I will.
He's a follower. James.
Right, I would, because I love festivals, literally. I go to every festival ever. I can imagine for people, I've been gutted when I've missed festivals.
Sure.
So I can see it.
James loves festivals. I hate them, but you got him when you miss them, so you.
But also,
follow.
sorry to interrupt, but also with the things that you miss at festivals. So you can obviously only see a few artists.
It's holiday, I can go to a particular festival. So I mean, you know, you get all these people on Twitter going, "Oh, I can't get a ticket to a certain festival." So there is, I can see there's a niche.
Chris, what's your opinion here? Yeah, I would as well. It's almost like you don't want to miss out here, you know? You don't know whether it's going to make a billion or nothing, but it could make a billion, you know? It's one of those things that could, yeah.
This is the play on the market.
Exactly. Exactly. Marvellous. Anthony, thank you very much for coming on.
Absolute
You've
pleasure.
scored 3-0 there. Well done. Here we are at the O2. It's Momentous Events 2016. I'm joined by Nigel from N Pharma. Thank you for joining me, Nigel.
Hi, Justin. Good to meet you.
Now, I know about your company. You know, I've chatted to you a couple of times on the podcast. Now, it's an odd one because essentially you're not directly listed.
No, we're private. Yeah.
You're a private company, but you can get exposure to your company via Onzima
Via
Ventures.
Onzima, that's right,
Ticker ONZ. Now, let's explain what N4 Pharma is about. And first of all, Onzima's taken, was it 49%?
So Onzima's taken 49% of N4 Pharma, yeah.
And you've taken 16% of Onzima.
Yeah, so I did a share swap out of
Yeah.
N4 into Onzima, so I still own N4 through Onzima.
That's right. So Onzima is an investment company, and they've invested in your company.
Yes.
All right.
Yeah.
So I've got 3 guys here. None of them are shareholders in Onzima. Guys, are you shareholders? Do you follow Onzima on the Vox Market app? Okay. Nigel, it's your job to get these guys to hit the follow button on Zima, okay?
Okay.
So first and foremost, what does N4 Pharma do?
So N4 Pharma, we reformulate existing drugs. So we take the drug, we make it better, we make it safer or whoever. We do that through technologies that we have and very strong patents that we have. And the first drug that we're working off is sildenafil, which is the generic name for Viagra. So Viagra, as a drug, is a world-leading drug. It's a £1.5 billion drug in a $4 billion market, but it has a problem in that it takes an hour before it starts to work. It then only lasts around 6 hours and it's out of the system. And what you want is you want that drug to work quicker and stay in the body for longer. And that's what our patent does. Our patent allows us to reformulate it, so it will start within 15 minutes. It'll stay in the body for much, much longer, so it works far more effectively. So that, in a nutshell, is why that's why you reform. So a drug will have, every drug has issues once it's launched, but because it's normally on the patent, it's not a problem. Once it comes off patent, you can then take that drug and make it more effective. So we've got patents that we're filing over the next few months for a whole range of different drugs. Sildenafil is the first one. We've also just filed patents on sartans. So sartans are antihypertensive drugs to help keep blood pressure low. And we've got more that will follow. But we also have...
So I was just saying, Viagra, everyone knows Viagra. Yeah. There's a few smiles from the guys there straight away. We know it's a massive drug. When it first came on the market, everyone knew about it, jokes about it, everything. But there is that inconvenience of you taking Viagra, it not being effective for several hours.
Exactly.
You could be going around Tesco's and all of a sudden you've forgotten you've taken it because you're out of the, and all of a sudden, Sasha, calm down. What I'm trying to say is, Viagra went massive worldwide. It satisfied the demand, but yet it wasn't that effective. Essentially, it was it's a little bit ineffective.
Viagra is a very effective drug, but it has those problems. So if you want the drug to work, you want it to be in your bloodstream, so that when you need the drug to work, you need to perform. It has to be in the bloodstream. If you take it and you want to perform quickly and it takes an hour, you've got an issue. If you take it and after 7 or 8 hours it's out of the bloodstream, you've then got an issue. So it's a serious issue for people who have erectile dysfunction to have the amount of drug in the body that needed. And that's what our patent does. It allows you to maintain the level of dose from taking one to the whole up to 24 hours.
So you can't go home on a Saturday evening, take Viagra and hope to have a good time that evening, because basically you're in church Sunday morning looking very excited. So, you know what I'm saying?
But it's a drug that works, but it has problems.
Yes,
if it wasn't a good drug, it wouldn't be a $1.5 billion drug. Right?
So
it's a very good drug, but there are still issues with the drug.
The market
is
huge.
That's what reformulation is about.
It's
about working with those drugs that have come off patent and trying to make them clinically more effective or friendly. I used to work at Boots, and my background is in consumer product development. So what I'm really doing is taking the consumer approach to pharma. There's no point just reformulating it because you can. You need to reformulate it because there's a need. People need an improved version of that drug, so that's what we do. People need a new improved version of a hypertensive drug, so that's what we'll be looking at as well. But we also have a vaccine side to the business as well as the reformulation. Mm-hmm. And the vaccine side of the business is about taking, it's a delivery system that improves the performance of oncology drugs. Now that's far more at an earlier stage, but it's the same sort of principle. We look at taking an existing molecule and making it more effective. So making it a more targeted, effective oncology drug. So that's the principle behind M4, reformulation, repositioning that drug to make it more effective.
So what I like here is that essentially reformulating, we understand this in a real world. For example, the first push bike invented was rubbish. It had no chain, it had nothing. Yep. And also you reformulate that, put a chain on it, proper wheels, goes faster. It's better for and that's the kind of thing you're doing, isn't it?
And that's exactly a new patent for this, yes. But you can't do that until the drug comes off patent. So when the drug's off patent, you can then start to reformulate it to make it improve it.
Okay, so the market is huge, but if the market is so huge and is it relatively easy to do? If not, why isn't everyone doing it?
If you're doing a new drug, it takes you about 10 to 12 years to bring a new drug to market, and it costs you maybe $1 billion, right? because you're reformulating, you're taking all the existing data that exists from safety and toxicity. We can do it in 2 to 3 years, and it will take 2 to 3 million to get that drug to approval. That is incredibly quick and incredibly effective. So you're talking 5 million, and you're working on a product that's going to be selling 500 million. So you typically need to get 10-15% market share. So, and the market is $4.5 billion. So it's a really strong opportunity. So we look at something that's high return but low risk, and that's the most important. Whereas pharma development for 12 years is massive return but incredibly high risk. So that's why we try and switch the odds in our favour.
Questions? I'm just saying, before we start, Nigel here is not just a chancer, he does have previous form. I mean, could give a quick summary of your CV.
I used to work at Boots, so my previous background, and then our last company was Oxford Pharma Science, which is a reformulation business again, so the model was established there. They were looking at reformulating ibuprofen, that's what we started off with. Ibuprofen because it's a drug I knew very well at Boots. So I do have a very big track record in finding technologies, finding patents that allow you to actually reformulate. The most important thing is having strong patents and strong technologies, and that's what we have with both the reformulation and the vaccine business.
I've got to say as well, they're pointing out, the market cap of Enzema is under 2 million, is it?
It's about 2.5
2.5 million
at the moment, but
yeah.
the Viagra drug, the valuation of that, if you're selling it at 500 million, we'll be getting 10% royalties, so we'll be bringing in 50 million royalties at peak. We earn 85% gross profit, so we're actually paying out 15% the other end. That's real cash coming in royalty terms. So if we're bringing in 30 to 40 million revenue a year, how would you value that? I'd multiply that by 10 and say that will have a value of 300 million. So
yeah, questions. Just Sasha, question.
How far are you along the road to reformulating this drug to where you like?
So we're about 12 to 18 months. Yeah, 12 to 18 months before we'll get to pre-INDA approval. In terms of other formulators, because our patent is incredibly strong and incredibly broad, people can't do it. They'll be breaching our patent. So we've got an incredibly strong patent around this reformulation of Viagra.
Viagra's coming off patent,
yeah.
And you've got a new patent.
We'll have a new patent on the improved version of that will last from today 20 years. So that's what makes it so attractive.
How much do you need to get you there?
To get there, you're talking about $500,000 to get you to that 18-month program, and another 2 to 3 million to take it through clinic. We'll be striking the deal at pre-INDA with the FDA means if you go to the FDA with our data, they will say, if you do what you say you will do with the clinical study, we will guarantee you a marketing authorization for that drug. And that's when you strike your deal.
So the reformulation of Viagra is not the only drug that you have.
No, absolutely. It's the first one that we're working on.
That's most advanced.
That's the most advanced. We're going to do patents for another 7 to 8 over the next 12 months. So we have
a pipeline of drugs here.
A pipeline of drugs. And that's the most important. News flow is going to be very important. So we're trying to make sure we're not about just one. A lot of biotechs are about one drug, one opportunity. And if it works, great, and if it doesn't, you're dead. Whereas we've got a whole portfolio of products that we can keep moving through.
You're a semi-advanced pharma company in this space that's not listed, but you're a pre-IPO stage potentially where you can get access through Enzema.
But you can access us by buying Enzema. Yeah, you buy Enzema, you're buying a chunk of N4 in effect, and what we do. Yeah.
Marvellous. Guys, if you need any further convincing, Nigel, 3 summaries, please. I had N4 in my head then.
Well, 3. First thing we've talked about, market cap of 2.5 million, but one product that's going to, will have value, NPV value of 500 million, and we're going to get a big royalty on the back of that. Secondly, we've got loads of other products that we're working on. And thirdly, I've done it before. I do know what I'm doing with the healthcare market. And I really believe in what I'm doing, and that's why I invest in myself through investing in Enzema. So I keep to try to top up Enzema because I'm investing in me.
How much do you hold?
16% of Enzema. Of Enzema, yeah.
Recently, last RNS came out.
Last one was 1.6p.
And what is it at the moment?
1.55.
There we are, guys. So there's the roundup and the story of N4 Pharma within Enzema. Sasha, are you following N4 Pharma by Enzema on the?
I will be adding this to my Fox Market apps for sure.
Marvellous. Matt?
I know nothing about the industry, but I'm going to look into it. I'll definitely add and look into it.
Follow.
Good.
Cool.
I'm interested, so follow straight away. Yeah.
Perfect.
3-0, Nigel.
3-0,
All
thanks.
right. Well done, Nigel from N4 Pharma there.
Thank you very much, Justin. Thank you, guys.
Here we are at the O2 for Momentous Events 2016. I'm joined by the CEO of Metal Tiger MTR ticker, Paul Johnson. Thanks for joining me, Paul.
It's a pleasure.
Do you know what? First time I met you in person, I've chatted to you on the podcast lots of times,
Yeah.
and you've got something about you.
Thank you. I don't.
You have though.
Shall we go for a drink then?
Yeah, your missus is here though.
No, my wife is here, behind the camera. Yeah.
Okay, cool. Listen, so the way it's going to work is this, Paul. There are 3 guys here. They're not shareholders of Metal Tiger. They don't follow you on the Vox Markets app, which means if they do follow you, they get your RNSs, and you like to deliver an RNS, don't you? You love
Every
that.
now and again, yeah. Every now and again.
Paul, I think you've broken the record for RNSs. You know, they are relevant.
Well, records are there to be broken,
Yeah.
and maybe we can have another go in the next few months.
I've got a theory about that. I do believe that, you know, keeping people updated is like a soap opera. They're tuned into Metal Tiger a lot, and so that's why the stock has done really well. I mean, you've got assets as well. But anyway, listen.
No, but this is important because if people invest their money, they want to know that the company is alive.
Yeah.
They want to know what's happening, and they don't see inside the office. You know, you put your cash into a company, you want to feel that the company is active, you want to feel that the company is respectful of your investment and is doing the best it can to raise, you know, as much news flow, as much positive developments within the business as possible. So we believe, and we are not going to change. And we know we have some commentators out there that don't like the fact we put out regular news. I couldn't care less.
No, do you know what? Listen, I love the fact that you are sending RNSs. I think you're doing something special here. And, you know, I genuinely do. It's news, you are delivering. And some people will think, are we sending too many RNSs out? No, you're not. Because the share price is showing you're not, I think. And it's getting, I quite like it. I think you're a very clever man who knows what he's doing here. I quite like it. Anyway, listen. It's not for me.
Shall we go for a drink?
Yeah, listen, I've held stock in MTR before, you know that. But these guys don't. They don't follow you. So what we're going to do, first and foremost, you've got a lot of things going on with Metal Tiger. If you could, in 1 minute, sum up what Metal Tiger is all about.
Yeah, well, we're an investing company in natural resource opportunities. We have 2 divisions, one metal projects, where we're looking for very large opportunities, and we're investing directly with teams on the ground in other parts of the world, so Botswana, Thailand, Spain, Russia, Tanzania. We're trying to find major mineral deposits that we can fund very capable people to do work on the ground, find these things, develop them into major assets. And we're doing quite well at the moment with one of our projects in Botswana showing itself to be a substantial opportunity in copper silver. We've also got an asset trading division where we buy and sell shares, warrants in natural resource companies that are on listed exchanges. We like stock that's listed because we can trade it and make some money, and we've made money pretty much from the off in terms of our asset trading operations, and that cash is reinvested into our business for our projects arm, so we don't have to dilute the share as much and raise money through the public markets. So it's a balancing model of trading, trying to make some cash, reinvesting it into our projects to find major deposits.
Yeah, and to be honest, you know, with any company you have to know the background, and Paul himself, you know, probably a modest guy, but he's a very good investor, and I think you cover off 2 parts of the business very well. You know your stuff when it comes to investing, in especially small resource companies, and then you've got the main man there, and give a bit of background about the main man there who's done 100 baggers 20 times.
Oh, Mr. Grammer.
Mr. Grammer, yeah.
Terry Grammer. We have Terry Grammer as our chairman. He's been involved in 3 or 4 scenarios where the market price of a company and the market value has gone up by 10s or 100 times in one case. And the most recent example is Sirius in Australia, where he was involved with the Nova nickel discovery as a member of the board of Sirius, and they found Nova, which is a nickel sulfide deposit in Western Australia, and the share price went from 5 cents to $5 in about 8 months. You know, and this is what we're in the game for. You know, we don't 20%, 30%, 100%. Oh no, don't bother. If you're in this business, it's high risk. You want the big returns. So, and he's had 3 or 4 of these, and so far with Metal Tiger as chairman, he's had a fair old return. I think in the last few months he's seen 2 or 3 times, 4 times on the share price. We think we've got a fair old way to go, so that's what we're focused on now.
Yeah, and you've got the people there, definitely. So what's the project right now you're most excited about? Is it the copper asset there, K2 and T3, sorry, and T2, wasn't it?
Yeah, well, T3 is the main target so far in Botswana.
Yeah.
This is a copper silver target. It's quite near to surface. It's a big slab of mineralisation relatively near to the surface. It's proving to be really consistent in terms of the drilling assay results that we're getting back. What you want to find when you're in this game is a substantial size deposit that's consistent in nature with really good grade, good mineralisation in a good environment to do business. And in Botswana, we've got just that. Is it a dream project for us? Can it massively change our company? It may well be, and we're hugely excited by that at the moment. But we shouldn't decry the rest of the business because we have a diversified model. And Thailand is probably, our next focus, and we're on the cusp of signing a major new commercial agreement for a silver-lead zinc mine. This is a mine that was in production for many, many decades, but went out of production in 2002. The mine has got 26 kilometres of underground tunnelling. It's got a production plant on site. It's still there. So you could almost switch it on, but you've got to do some refurbishment works to get it running again properly. It's got all reserves underground ready to mine. It's a perfect scenario for an investing company such as ours, and it's a nice piece of diversification for the Botswanan copper silver project, which is exploration development. This is actually near-term production in Thailand, so it's a really nice mix. And those are our kind of top two at the moment, but there may be more.
Yeah, well, oddly, I think your strength is also your weakness, because you've got so much going on for a new investor. It's almost hard to keep track of it all. But that's also strength, because you've got many fingers in many pies, and like I said, you've got two sides of the business, and also headed up by two guys who know how to invest on the investor side, and on the geological side, a guy who's also proven his worth. So anyway, listen. Any question, guys? Any questions at all before Paul gives it? Go for it.
How stable is the government and the operating environment in Botswana?
Well, Botswana is pretty unique in Africa because their method of managing their affairs is hugely transparent, very, very positive. They're commonly quoted in London as they being the Switzerland of Africa. They do everything entirely above board, totally focused on foreign direct investment and supporting the people and companies that want to invest in country. It's a beautiful environment, and for us to find what we found in Botswana alongside our partners MOD Resources, who are listed on the ASX with the ticker MOD. They have 70% of the project, we have 30%. It is phenomenal because you really do want to feel comfortable in the environment that you're working in, and in Botswana that's absolutely the case.
And that's a very good question, because like you say, you can have the best asset in the world. If it's in a corrupt country, then you can do all the work and they just take it off you if they want to. So it's a very good question. Any more questions, guys?
So, obviously the share price has risen a fair bit since the start of the year, from sort of penny to where are you now? Over 3 pence?
Yeah, 3.5 pence.
Have I missed the boat?
Wonderful question. And if you compare this to, say, the Syria situation, when the shares were trading at 5 cents, they went up to 17.5, 20 cents, and maybe the same question had been asked then. What would the answer be? Well, a few months later, the share price had moved up to $5. Now, I don't know what's going to happen in terms of our share price. It's market dependent, sentiment dependent, and company dependent. Lots of different elements, some of which we have control over and some of which we don't. I can promise you that the team is hugely active and focused and working like dogs to push the business forward. I can promise that the existing interests that we've got are not the end of the road. There's plenty more to get on with and develop, and new things to bring on board. I am absolutely astonished with the quality of the portfolio that we're building within the business. We have some superb assets, but we've got Terry Grammer behind us, who is has a level of knowledge that surprises everybody. We've sat in city meetings, 30, 40, 50 meetings with lots of different people with technical capability, and they can talk about any commodity in any environment, any part of the world, and he knows his stuff. And he's over everything that we do. And that's the reason why we're building the business in Thailand in the way we are, why we were able to secure the Botswanan interest, why we're working in Spain. He's behind it. And there are so many opportunities out there. And the quality of what we've got within the portfolio is superb. So I don't know where we're going share price wise. I think we've got a pretty decent chance of a good run upwards, but it's not for me. That's crystal ball gazing. And as Terry would say, his crystal ball is cloudy, so he can never see the precise direction. But I can promise that we'll do everything we possibly can to build this company far, fast, and to as big a value as we can possibly get in the shortest possible time by doing good quality work on the ground and investing in the right way in this sector.
Yeah, I've got to say, you know, I've seen a lot of companies that have CEOs that pretend to be building value, but I know these guys, even just writing RNSs at the frequency you do is not easy, because it's got to be passed by nomads and all this stuff. It's hard work, even just doing that. But I know you can tell you are working very hard to build a lot of value. Anyway, what do you think, guys? So what's your name, sorry?
Mike.
Mike?
Yes.
Is Metal Tiger on your Vox Markets watch list now?
Watch this, absolutely.
Yeah, okay.
Convinced.
What's your name again? Chris?
Yeah, absolutely.
Absolutely, you convinced 2 out of 3 there, Paul. Ted, is it Ted? Yeah, do you know what? Listen, you've got to, even if you're bored and you want to read something on a daily basis, you get an RNS from Metal Tiger.
Well, why bother with a quarterly newsletter when you can do it
exactly
on a regular basis? Now, have you still got Metal Tiger shares?
Do you know what? I sold that. I did really well. I bought. They were trading at a range. You know this, from sort of 0.8 to point, up to 1 pence. I bought at the low range. They're probably my best performer in the last 2 years. I did almost a 5-bagger on these, and I thought, right, that's enough. I didn't agree. Come back, but I'm still looking to get back in. But I do believe.
Well, you're not back in yet.
Not back in yet. But they're on my watch list,
Okay.
But listen, I believe that. Like I said, there are lots of CEOs. There are lots of CEOs who pretend they are working. They're not. These guys are working, and they have the ability.
They're not. But many CEOs in our sector can't work because the amount of funding that's available to them is very, very small. And so if they try and do anything, they're restricted. Now, the way you get around that is by innovating and doing the very best you can to generate work with a limited amount of finance. The advantage is right now the projects and opportunities are still lowly valued. The sector's kicking, it is recovering. And you can still innovate now. In a 6 months' time, 12 months' time, when the sector's been strong for a good period, then the projects will be more expensive. The people selling things will want more. The markets will, but there'll be more finance around. So I don't actually think it's a terrible thing if a company is limited in what it can do. But what I do expect the companies to do, and this is for the companies we invest in as well, I expect people to work hard. There are decent working people in different parts of the United Kingdom and elsewhere that take some of their cash and they invest it from their pension or from their available, cash in their bank account. They invest it in a company, and if they invest it with us, I promise them that we will put everything into making that money work for them and giving them a return. It's our job, it's our duty, and if we don't do it, we should be fired. And perhaps there are some on AIM that deserve to be fired. But Metal Tiger is not one of them. All of our team, in every role that they're involved with, works very hard and diligently for the investor base, and that is not going to change. Yeah,
well listen, you've scored 3-0 here, and I believe in you. I mean, you said several things on the podcast that have been on me that have stuck with me, and just those small nuggets stuck in my head, things, this guy's a very sharp guy. And listen, Metal Tiger will, as long as you're there, will always be on my watch list. And you scored 3-0 here, so well done.
Thank you
guys.
very much.
You're on the watch list.
I'm not going to argue with these guys.
Yeah, exactly.